Welcome to Business Book Daily, where we pull one useful idea from one business book and turn it into something you can actually use. Today's book is One Up on Wall Street by Peter Lynch and John Rothchild. Lynch is a legendary investor and former manager of Fidelity's Magellan Fund, and Rothschild is a financial writer known for making investing ideas easier to understand. Before we get into the book, today's episode is sponsored by CommissionOnly.com. Want to sell more without adding fixed sales salaries? Many companies hire commission-only reps, experienced sellers who get paid only when they produce. Post your opportunity on CommissionOnly.com and get in front of motivated reps who are already looking for performance-based roles. That's CommissionOnly.com. Now back to One Up on Wall Street. The big idea is that ordinary people can sometimes spot great companies before Wall Street does. That doesn't mean every shopper should become a stock picker because they saw a long line outside a store. Please don't build an investment strategy around vibes and parking lots. But Lynch's point is smart. Everyday life can give you early clues. You may notice a store getting busier, a product gaining fans, a restaurant chain spreading, or a software tool becoming part of people's daily routine before professional investors fully catch on. That observation is only the starting point. The real work comes next, studying the business. One Up on Wall Street argues that you don't need to predict the economy or follow every market headline to invest well. You need to notice promising businesses, understand how they make money, study the fundamentals, and avoid buying only because everyone else is excited. The first lesson is to invest in what you understand. The best ideas often come from ordinary observation. A customer might see a product taking off before analysts start discussing it. An employee might understand why a company's service is better than competitors. A business owner might recognize a tool that's becoming essential in their industry. But understanding the product is not the same as understanding the stock. You may love a company's stores, software, sneakers, or sandwiches, but that doesn't automatically make it a good investment. The second lesson is to do the research after the discovery. Spotting a company in the real world is step one. Then you need to check sales growth, profits, debt, competition, leadership, and whether the company can keep growing. A familiar brand can still be a bad investment if the numbers don't support the story. Popularity gets your attention. Fundamentals decide whether the opportunity is real. The third lesson is to know what kind of company you're buying. Not all companies should be judged the same way. A slow-growing company is different from a fast grower. A turnaround is different from a steady performer. A cyclical business is different from a company with long-term growth. That matters because you need to know what success is supposed to look like. If you don't know the category, you'll judge the business by the wrong standard. The fourth lesson is to avoid market timing as the main strategy. Guessing short-term market moves is hard even for professionals. Trying to predict every dip, rally, panic, and comeback can make smart people act foolish. Lynch's approach puts more weight on understanding individual businesses. What does the company sell? Who buys it? Can it grow? Does it have too much debt? Is the stock price reasonable compared with the opportunity? Good investing depends more on clear business judgment than constant market prediction. The fifth lesson is that patience matters. Strong investments often need time to work. Many people sell too early because they get bored, scared, or distracted by market noise. If the business keeps improving and the original reason for owning it still holds, patience can be a real advantage. The market may move fast, but companies usually build value more slowly. So how do you apply this beyond investing? Start by studying your customers the way a good investor studies a company. Look for what people are already choosing, recommending, repeating, and paying for without heavy persuasion. Real demand often shows up in behavior before it shows up in reports. Next, separate excitement from fundamentals. A product can be popular and still have weak margins, poor retention, bad operations, or too much debt. Before chasing a trend, ask whether the business model behind it is actually strong. Then define the category you're playing in. Are you trying to be a steady performer, a fast grower, a turnaround, or a niche leader? Different strategies require different decisions. Clarity helps you measure progress the right way. Finally, build patience into your strategy. Don't abandon a strong plan just because the market gets loud or a competitor gets attention. If the customer need is real, the economics work, and the company keeps improving, Consistency can beat constant reaction. Here are 3 insights worth sharing. First, the best business signals often show up in customer behavior before they show up in market reports. Second, a popular product is not automatically a strong business. The numbers still have to support the story. Third, smart strategy starts by knowing what kind of company you're building, not just chasing what looks exciting. One Up on Wall Street is worth reading if you want to understand investing through clear examples instead of dense finance theory. It's also useful if you want a better way to think about customer behavior, company fundamentals, and long-term decision-making. You might skip it if you want a modern trading manual or short-term market strategy. Today's closing sponsor is memoirghostwriting.com. Many of the best business books begin as ideas leaders have been refining for years. Frameworks, philosophies, and lessons learned the hard way. Writing the book forces those ideas into clear form, and once they're on the page, they can travel far beyond a single conversation or presentation. At memoirghostwriting.com, we write memoirs and business books for entrepreneurs, founders, executives, and industry experts. We handle the interviews, structure, writing, editing, design, and publishing, so the final product is polished, professional, and built around your voice. If you've ever thought about what a business book could do for your authority, speaking, consulting, lead generation, or legacy, visit memoirghostwriting.com. That's it for today's Business Book Daily. One book, one useful idea, and one smarter way to build.